Ooh.
Like that. Will you let us know when we're live?
We're live.
Oh, baby. We are live. And good afternoon to everybody.
Good afternoon.
We haven't seen you guys in a couple weeks now, right, CK?
That's right. We had a little bit of vacation during the Thanksgiving holiday break, and we're back here, the MLO team. A little less people here today, but we're trying to be COVID compliant and still get out some great information to our clients today and our referral partners. So me and Casey are going to hold down the fort for the MLO team, and we're excited to talk about some new things that are coming up in 2021, and glad you're here with us.
Yeah, and we hope you guys had a fantastic Thanksgiving. You know, the break was, I think, much needed for everybody. You know, it's good to see, family. If you we're able to see a couple families. I know we had to keep it different this year.
That's right.
Well, kind of funny for me, guys. I cooked my first Thanksgiving meal.
Oh, gosh.
I didn't burn anything.
Wow. I'm so impressed, Casey.
So, yeah,
you made it. In fact, seeing you here today, I was like, God, is he going to make it? Just because I knew that you were cooking this week. So I thought you might have like gauze on your fingers and everything else.
Came in just, looking like, what is that, Shadow Man?
That's right. That's right.
Well, guys, we got exciting news. We're coming into a new year, right? We just kind of got through election. We're kind of still getting through, however you want to look at it. But we got 2021 coming up, and 2021 come up. That means we got some different changes in the loan amounts.
Yes.
And this is exciting, guys, because we just kind of every year we tend to see loan amounts typically increase. At least for the last few years, we've definitely been seeing a nice raise. And so we want to jump in and kind of, give you guys the updates and let you know, what's changing.
Yeah, the Portland metro area, we've seen some increase in the purchase prices and definitely need some help out for our clients to secure some homes in the price range where it's been a little bit more competitive. And so with FHA and conforming loan limits improving or increasing, I should say, with low interest rates, we're in a great position here in the Pacific Northwest to help out more clients more than ever.
Yeah, and I think it's helping those clients kind of battle and stay in the environment we're in, right, with rising home prices and stuff like that.
Yeah.
So and we're going to dive into and unpack a lot of this stuff for you guys. So let's jump in it.
Yeah.
Right out of the gate, we got the conforming loans, and so these are your conventional loans, Fannie, Freddie, right?
Yeah, where are they at right now?
Right now, guys, your max conforming loan limit is $510,400. So that's $510,400, okay? And that's current 2020 max conforming limit.
So the max that you could purchase with putting down 3% would be right around 526 in the current environment. Looks like 537 if you put down 5% for our conforming clients. So that kind of gives you an idea with the new loan limits going up to...
Yeah, new loan limits are now going to be increasing. This is for conforming, and this is going to be in 2021. They're going from $510,400 up to $548,250.
Wow, that's a $37,850 increase in the maximum loan amount for conforming. That's pretty huge. So now those same instances where you could only max, if you're putting down 3%, would be the 526 is now going to 565.
And that's sweet. And I think, for our listeners and viewers out there, what CK is telling you guys is that he's giving you a max purchase price based off of that max loan amount. So it's like, how much can you guys buy with going to the max loan amount, and that's a great point.
So like I said before, with that 3% down, and that's for our first-time home buyers that haven't owned a house. Typically, within the last 3 years, there is some other, you can still do 3% down, but a lot of our clients are electing to do the 5% down, and even at 5% down, you're looking at a $575 purchase price, and that's getting you into maybe the price point where, hey man, I just could not, the houses in the school district I wanted to be in were a little bit higher. This gets me there. It's helping me get there without having to save a little bit more or put a little bit more down. And we're talking, about $1,500, additional down payment and about, $150 a month in a mortgage increase monthly. So that kind of gives you an idea, and that's based off of current interest rates with a 680 credit score, compliance-wise.
Yep,
Compliance.
for sure.
So that's just giving you a hypothetical instance of where the loans are right now. But what that does is gets us so much more excited for our clients that are kind of been shopping for the last 6 months, that maybe this opens up a whole new line of inventory for them. And that's what they're kind of needing, a refresher going into 2021. We've got new construction going on.
Totally.
We have things being finished out. So it's pretty exciting for our clients that are currently shopping for new homes or starting to get into it. We're receiving or about to receive our W-2s and our tax returns and getting them ready to go. So this is a good time to budget, plan, and talk to an MLO loan officer about what that looks like for you in the near future. How does this affect you? And that's what we're here for.
For sure. And thanks for giving us that little run on that. For anyone tuning in right now, I just want to kind of catch you guys up. This is the MLO podcast. We're here to constantly try to feed out good information for anyone looking to purchase a home. Any of our referral partners out there, we just try to use this as a transparent environment to put out knowledge and just present information that we have. And if you guys are out there listening, feel free to please shoot in comments. We love comments. We love to try to answer questions for you guys. If you guys got something going on, we'd be happy to answer any of that stuff. We also have a phone number that you can call in if you want to call in, and we call this our VIP line. But anybody can call, and we're happy to take a call, answer anything you guys got going on. I'll let CK start us off on that phone number.
Yeah, we're at 503.
847, and 847 is VIP, so don't be fooled by those numbers.
Yeah, you're a VIP. So 503-847-9038 is the number you can reach us at, and that goes out to all four of us MLO loan officers.
Yeah, we
are not having Brie here today because she's out there making it happen, but we're trying to keep some space open for us to be safe and compliant. Also, obviously, Addison, our guru, our energy builder guy, is working from home today and watching us as well. But we want to make sure that we're out here weekly for you guys, answering any questions that you might have, and just getting this new information out to you guys so that you can plan for 2021 and make your dreams come true of home ownership. So back to where we're at. So we're talking about loan limits going up for both conforming and FHA. Do you want to brush on FHA, where they're at nationally, and then kind of where we're at here in the state of Oregon and Washington? I know that you might not have Washington, but I know here in Oregon you have those figures as well.
Yeah, absolutely. I'm gonna just finish up a couple comments I had for our conventional loan there. So we talked about it. So we went from 510,400, and we're going up to now 548,250. Like CK already mentioned, it's just under about $38,000 increase. You're getting in loan amount. And this actually reflects about 7% increase in loan amount. So that's good. And really, why did that happen? Why would we raise loan amounts, right? Well, guys, we also have home prices that are raising. And the bottom line really is they're just trying to stay in line with the rising, if home prices rise, let's just say 7%, it's not a direct, match, but they're trying to keep mortgage loans in a competitive environment to be able to purchase homes that are rising. And that is directly, based from the Housing and Economic Recovery Act. It requires a baseline analysis each year of loan amounts, and that's where that's coming from. So they're doing an analysis throughout the year and trying to figure out, where do loan amounts need to go to stay with current home prices. And so that's a big, big point. And also don't forget that with the conforming loans, we have that, max loan limit, but there's also high cost areas out there, and you might be in a high cost area where that loan limit is higher. High cost area is kind of where it's about 115% of the local median home value. New ceilings for the new ceiling loan limit for one unit properties in most high cost areas will be $822,000. And so that's a lot higher. So we just wanted to put that out there. You might be in a high cost area where you have a higher.
Yeah, for our podcast listeners and our YouTube watchers from other states And counties, this might be where you guys are falling into place. And we'd be glad to go over that with you for each county on that side of things. So keep that in mind, that you might be in a high cost area, and those loan limits might be increased for you there. Those are great points, Casey. I appreciate you kind of talking about those.
Yeah.
With that increase, are we going to see more applicants, do you think? How do you think this is going to affect your clients? I mean, day to day, I know that my clients have been asking for some help on this side of things. We've been able to structure some, 80-10-10s and being able to kind of be creative, with our home prices being going up quite a bit here in the Portland metro area. It's been a little bit of a challenge for our clients that are kind of been on that fence right there. So I know from my perspective that this is going to be a great tool, a great way to get out there and reach more clients that maybe you've been on the fence saying, hey, you know what? I need a 4-bedroom. I'm priced out of it right now. That extra $38,000 is really going to help clients get there, and that just means that you need to reach out and talk to your loan officer and reconnect with them again and talk about figures. Because guess what? Interest rates are so fantastic right now. It's an anomaly where we're at. The stock market's doing well. We had an economic discussion and that we listened to at WFG. We think, based off of economic analytics, that interest rates are going to stay low for at least another year before we can follow inflation going up and catching up with that. Totally. We know things are going to go up in the next probably 2 years, but this is a great time to take advantage of both things: interest rates low, conforming limits going up, and being able to secure a loan. And of course, COVID's playing an effect in it. Yeah, because everybody's talking about making some changes. We need an office now for our home. We need more room for our family. We're growing. I want some land, whatever it may be. So this is a great time to think about your goals going into 2021. And Fannie and Freddie are going to help you get there with those income limits rising up.
You're getting $38,000 more to be able to lend with. So I like that. Let's roll into that second point, guys. Yeah. Tuning in. This is MLO Podcast. We got Casey. I'm Casey. This is CK over here. We're missing a couple of our main peeps, but we're trying to keep it very COVID safe and follow all the protocols.
That's right.
So second point we're running into here, guys, is FHA. FHA also increase their loan amounts as well, and it's a little bit different because you have national loan amounts for FHA, and then you have specific state county loan amounts.
That's right.
So we're going to go through a couple of these. Basically, the new FHA national loan amount. I say national, but that's just
we got a lot of listeners out there, so we want to brush on this.
Totally. This is it's. The new is 356,362. So 356,362 is the new increased FHA loan amount. That increased up about $25,000 from last year, which is
just
cool.
Shy. Yep.
Just shy. So what was that loan amount last year? Or I guess it's this year, right? We're talking 2021.
I think it was 331 is where we're at. So we're going to watch it go up 7%, right about the same as conventional as far as it kind of following that percentage base. But right here in our Tri-Counties, what does those new numbers look like?
Yeah, so this is Tri-Counties. This is going to be kind of your Multnomah, Clackamas, Washington counties that we have here in this Portland, Oregon area. And that max FHA loan limit is $491 and $50.
It's huge, folks. So our clients with maybe lower credit scores, a little less down payment, this is a great program. Man, I priced a couple of these with a low credit score. We're in the mid to low twos. That's just insane that we're being able to offer that with a challenging credit score, good work history. They deserve to be in a home. The upfront mortgage insurance is helping pay for some of that MI mortgage insurance to help offset and lower that monthly mortgage payment, make it more affordable for our clients to get into homes. And so that's really big. That is really big. And that's only going to help our clients achieve their goals of homeownership quicker. Some of those people that may have, looked at possibly working on their credit right now, I would say reach out to your loan officer, MLO team member. Just get out there and research what's available for you right now, because I mean, I couldn't believe it when I priced it out the other day. I mean, it was a 640 credit score and a 2.375 interest rate. That's
Fan
with 3.5% down.
Fantastic, man.
I know that
again, compliance.
That's
We got it.
but
So-
I mean, come on, folks. This is the time to take that extra step. Just learn about what your situation is. It might not be that you're ready to buy today or tomorrow, but it could be that you're taking those first steps to understanding what homeownership is and what that's going to look like in the future for you.
For sure.
And then we can kind of just get you on a program, a plan of some key items and nuggets to take away and to execute in order to get there. So that's my passion. That's my job every day, is to look at ways to help homeownership come true for people that are, want to make a change in their life, get out of the apartment, upgrade, downgrade, whatever it may be for their situation right now. We're here to discuss all those options. And our job is to learn about these things day in, day out, push it out to you, and just, make these dreams come true.
Yeah, I mean, I love it. I think it's kind of funny. Story time maybe a little story time. And it's it's funny because like I joke around with some of my buddies and stuff like that, and it's like, some guys just think we just sit at a desk and it's just like, hey, you just have to lock your loan, you just like push it in. I try to make people understand, this is it's kind of like being a CPA or an accountant. I mean, you have guidelines that change constantly. We're constantly reading manuscripts that'll make you fall asleep in a minute, but you need to know these details. You need to know things, and they can change sometimes daily. I mean, you're going to have annual changes and stuff, but it's something that we pride ourselves in trying to know exactly what the new current guideline is, or the new current loan amount.
That's
or
right.
what's changed, because you need to know that, or else you might run into some hangups. But knowing the knowledge for us is something that we take very seriously. We're going to dive into every book, guideline, and anything out there that might be changing, so we could take that, and if there's a benefit for our clients, we want to know it so we can help them, right? And kind of coming back into that, our FHA loan. So it's such a loan that's just, geared towards maybe lower income or lower credit scores and helping homeowners get in. And for that to, have a max loan amount of $491 and some change, that is incredible. Again, like me and CK mentioned, it kind of does follow the conforming loan. So it's, about a 7% increase. Right. That also, as well as the conforming, is kind of analyzed by that the Housing and Economic Recovery Act. Basically, that's just like the act. That's not doing the analysis, but that act put in place requires an analysis to be done every year. And again, so they're going to watch kind of where home prices are at, and should we raise FHA loan amounts? Okay, yeah, it looks like home prices went up 7. Let's maybe raise some loan amounts up. And I do appreciate that there is a committee or entity or whoever's doing the analysis out there doing that for clients and homeowners every year to make sure we're not getting behind in the curve, right? And that's kind of going to lead us in to a couple of these final 2 topics that we wanted to kind of go from. Okay, we got increased loan amounts that we've just talked about, and so then how's that going to help you as a home buyer? And I know CK kind of mentioned it, but there's a couple other things that we forget about. And after that max conventional loan amount, right, CK?
Right.
Where do you go if we're above that?
There's only a couple of different choices to do. It's going to be, with conforming and FHA, they're credit score driven. We've kind of talked about that. That's really going to tell me which way I'm going to place you into a certain loan. And there's cons and benefits with each product. But typically, if you're over that max loan limit, we're looking at jumbo loans. And jumbo loans, they're fantastic. It gets people into the house with the same one loan process typically, but there's some layers behind it. They're a little bit more intrusive on the underwriting process sometimes.
Intrusive, that was a good word.
Yeah, because that's what my clients feel like sometimes.
Oh, totally.
When they're going through it. So there's
understand.
some additional layers. When I say layers, reserve requirements, minimum FICO scores, minimum down payments. So there's a lot of different things that come into play. We all know where conventional and FHA comes in. We need a minimum of, let's say 5% on conventional, just, to sweep it out there.
Right.
There are some 3% products out there, but
Right.
limited to income and everything else. And then FHA, we know it's 3.5% with, and we do have some great products on the jumbo side. We talked about 10% down with no MI, but still there's that 10% down.
Right.
10% down on a jumbo loan, that's quite a bit of money when you start talking about 600,000. We're talking about another 60,000 versus that 5% down,
Right.
which would be maybe hard to do if you've got some improvements you need to do right when you get in the house. Capital is huge right now with people playing with the stock market and everything else, and there's some great gains to make with your capital. So people are being extra careful where they're placing their funds at, and they want to have that flexibility. So this helps with the holistic side of the application when I'm sitting talking with a loan officer, or excuse me, a client about their total situation. We're talking about allocating funds here and there. That's why this is huge, is because that $30,000 jump is going to help make some of those decisions more easy, or maybe more clairvoyant for those clients. And so I think that's why it's important on this side of things.
So what I hear you saying is might actually help us leverage some stuff a little bit more, right?
It just gives more options out there,
Right.
for sure. And it may be that you've been looking at these houses and you're just like, gosh, man, that's the house I want. I got to save another 20 grand, and all of a sudden that's now available.
Now that's available.
Ding, ding, ding. All the people listening right now are thinking about that house right now. And they're like, God, yeah, we were just, 15, 20 grand away from it.
Totally.
So those are the bells we're trying to ring today, and get clients excited about and thinking, hey, man, maybe we should go revisit this. Let me talk to my loan officer about being requalified. Now the interest rates are even lower than when we talked to them originally. Maybe I should be just looking at these numbers again. County taxes are out right now, so now we can drill down that payment even closer, knowing where taxes were in 2021.
Good point.
So there's a lot of different things that have changed maybe in the last 6 months since your last talk with your loan officer. That's why it's important to stay in touch with them, talk about different changes in your life. Maybe there's a new addition to your family, job change, everything could be COVID driven. So we like to have those conversations. We love to talk to our clients. So if you've spoken to one of us in the past, have a pre-qual letter, maybe we've lost contact over the last year or two, whatever it may be, I beg of you to reach out to us. Let's have those conversations again. Start fresh and talk about the new county limits, what that means for you. We'll talk about new interest rates and what that means for your purchase power. And I think it's just a great time to just sit back and see where 2021 is going to place you if you're in the line for a purchase or refinance, I should say. Refinances are fantastic too.
And those spouses out there, guys, like maybe this is the time, like, hey, sweetheart, they did increase the loan amounts a little bit. We maybe have an opportunity to get that one house we were looking at on Cherry Park Lane with the cobblestone part, the walkway, right? And the pool.
I like it. I like it.
But
I see the Christmas lights up already.
Yeah. And it's like, but guys, it might seem like a small, like, okay, loan amounts change 30 grand, what do you do? But for somebody that's in that specific point, and like CK is trying to explain out there, like, this is a game changer for someone that could have maybe didn't have enough down payment to get that home, or they needed to be able to, stay in a conforming loan and not go to a jumbo loan and stuff like that. So it might not really be a giant benefit for everybody, but there's people out there this is a huge benefit.
Well, I'm looking at the people that waited. Maybe interest rates were at 4%, when they were shopping or thinking about, or they're talking to us, and now rates are in the low threes and conforming limits have gone up. So now you can even afford a house that is 40 grand higher.
Good point.
For the same price that I told you, a year ago.
Yeah.
So,
that's a great point.
those are the benefits I'm talking about.
Totally.
The cost of money is a lot less than it was a year ago. It puts you in a better position. For those people that are refinancing their homes right now, same thing. We're looking at lowering your terms. Maybe you purchased a house 1 or 2 years ago. Let's get you in a 25-year. Let's shave off a few years, lower your monthly mortgage payment, and get you into a better situation. So there's a lot of benefits out there, and that's why we're excited to be out here today talking about not only loan limits increasing, but where interest rates are at, where they're going to be at in the future in 2021. And following inflation, we know that they're going to go up. Based off those economic forecasts we listened to today, they're thinking, late 2021, early 2022. But, with the GDP, hopefully once the vaccinations get out there, I think we're going to go back up pretty quickly. We saw it happen in, basically 3 months when we kind of loosened things. Yeah, so I feel fantastic about 2021. I feel like there's more opportunity for our clients more than ever. And for our referral partners, our realtors out there listening to us as well, man, I'm excited for you as well. That's just going to open up more clients for you too. And so if you have clients, talking to my realtors out there that have a pre-qual letter that's a little bit less than what it was before, reach out to that loan officer, get it renewed, see what that payment looks like for your client again. And if they're not getting back to us, me and Casey are here to take care of it for you.
We'll take care of you. The biggest thing I'm pumped about, CK, is this helps, and we'll transition our fourth point here of kind of current real estate market and home prices, but this helps our consumers, our buyers out here, compete with rising home prices.
That's right.
Because, these things ain't slowing down. And so we got some information here that we want to put out to you guys, and this is based off of Portland, Oregon statistics. So that's just where I wanted to pull from. I figured that'd be a good area to kind of start with. So we've had loan limits increase. And for anyone jumping in, this is MLO Podcast. Me and CK are holding it down, being COVID friendly today, keeping 6 feet apart. And, we're missing a couple of our co-hosts, Addie and Brie, but, you'll see them shortly. We might be having to do some 2-people segments here as we kind of transition through this COVID period. But MLO Podcast, it's a podcast and live show for all of our buyers, home buyers, referral partners out there, anyone really, because we're just here to offer some transparent information and just try to give you guys some current information and topics out there in the mortgage business. So coming into the loan changes for 2021, we talked about how the conventional loan amount is increasing. The FHA loan amount has increased, or at least is, up there in a competing amount. And so how does that help our buyers with these home prices, right? Well, let me give you some information on Portland, Oregon. Portland, Oregon, and this probably is I'd say more of a country thing than really, at least here in the state, but strong sellers market is the number one thing right now. Shocker, right? We got low inventory and we got a bunch of people wanting to buy homes.
That's right.
So there's your seller's market. But the one thing that really stands out to me, this is for single family homes, CK, and I know you got a number over there. Tell me what the average list price was for a single family home in Portland, Oregon.
The last 90 days is $660,000.
Yeah, so $660,000, guys, was the average list price. This is kind of current data. So average list price of Portland, Oregon, single family home, $660,000, and that lasted for 90 days on the market. $660,000 is the average single home price.
I can't believe 90 days.
I know.
I think that would be less. But.
Yeah, there was a couple. We'll get into condos here next, but. The most expensive home listed, Portland, Oregon, $7,750,000, and the least expensive was
$80,000.
Yeah, baby. So it's like, is there a range there?
There's quite a bit of a range there. Congratulations on your $7 million house, Casey.
Yeah, so in my next life, maybe. Yep. The one thing to point out though is $660,000, guys. That's the average home price. Let's just be real for Portland, Oregon. That's over $500,000.
That's crazy.
On its way to $750,000.
That's why it's so important for these loan limits to creep up with this. And the whole thing is, I have got a couple clients that are coming back to me right now. We spoke a couple years ago, story time. But we're talking about that increase that we're receiving in value every year. And as you wait even longer, that's what you're missing out on. I know that I was looking to sell my primary residence a couple of years ago. Thank God I didn't, because it's gained another 110,000 in the last 2 years. Yeah, I would have upgraded to another house and whatever, but you start thinking about those little things, and those people that are been on the sidelines and waiting. These are the things that can take place. Now you're in a refinance environment where you could lower your interest rate and your payment some more. So just think about that. Taking that leap of faith. You want to do it. You want to get out of that apartment, your mom's house. You've been saving. This is a time to talk to a loan officer and really do a deep dive in your personal budget, your finances, your income, and that's what we do. We do analysis. We'll tell you where you're at. You tell us where you want to be, and we give you a chance to meet those goals. And so I think that's the best part of my job, is watching these people come to me 2 to 3 years later. They're like, Christian, I'm there. I'm ready. You stuck with me. Nice. And that's huge. So I'm proud to be an MLO loan officer, being able to give out this information, and at the end of the day, be there for them when they need you.
Yeah, you guys. Let's be honest. We love what we do.
Yeah,
we wouldn't be doing this if we didn't love it.
Yeah,
this is a high stress, high finance job. This isn't for the faint of hearts.
Nope. We take on your emotions every day. Believe me.
I'd lie to you right now if I haven't stayed up at night and had to listen to clients crying on the phone. This is part of the job. Sometimes it gets emotional, but
there's good, bad, and the ugly.
There's good, bad, and the ugly, like Clint Eastwood movies.
Yeah.
But we are here to just be that hand, though. We'll call you when you absolutely. It's the moment we got information, we're calling you. But we just want to help you.
Yeah.
We just want to help you.
Yeah. So circling back to where, the Portland market's been going. Yeah. Great increases. We look, Portland's still going to be a desirable place to move to.
Yep.
We're always going to be that way. It's a gorgeous Pacific Northwest. So let's get you in there so you can take advantage of it while you're still affordable to get into a home. We know prices are going to keep going up. So,
and CK is making a good point, guys. So let's just say you were one of the, like us or something, you bought a couple of years ago. Well, I just mentioned it was 660,000 was that average list price right now. That is since December 2017. This is off the data that we were using. It's increased nearly. That list price, average list price, has increased nearly $124,000.
Shut the front door.
Yeah, so
that's crazy.
So
those are some gains.
That's some gains.
That's not skipping leg day. I can tell you that.
Yeah. That's not skipping leg day. And guys, a mortgage can be a financial tool for you.
It is.
People forget that. It's just like an expense we pay every month. Dude.
Your
interest rates dropped, you refinance, now you're leveraging your equity, and all of a sudden you got $250,000 equity in your home.
Yeah.
The way we're leveraging it. It's like.
Yeah, so we just want everybody to have the same chance to get into a home, find some financial stability, have your money every month that you're putting towards rent, towards your own future goals in your retirement. I think that's the first step for anybody. As we're seeing millennials grow their families and starting to look at home ownership more seriously, that's why we're seeing such less inventory. We're seeing a high demand, and we're just going to keep on seeing that, especially here in the Pacific Northwest. So,
and I feel like Addie's made a point there on the millennials on one of these episodes where it's like they're the future of home buying, guys.
60%, I think, is the number that you said.
Yeah, you're right. Yeah,
60% of the new home buyers we're seeing are millennials.
Sure.
So
shout out to Addie.
Yeah, that's huge, and we're just going to see that increase. But that's kind of our economic.
Look, if the single family guys is a little bit too much flavor for your taste at the 660, we got some information on condos and townhomes right here. So CK, give us some average.
Yeah, preach. So the condos, townhomes, the medium list price right now is just slightly under 400,000.
Nice.
And the average, I think, is, you said 112 days.
Yeah, and a lot of that you gotta. What I was looking at in those statistics too, they're factoring sales fails. There's a lot of stuff, guys. I would say
foreclosure,
whatever's happening. I think you're probably more on purchase side, a 30 to 45 day, and refinance 45 to 60 days, kind of just where the market is. But the big point there is 660 on the single family to a condo townhome of 399, right?
Yeah.
Tell me what that most expensive condo was.
Dang.
It's impressive.
4.3 million.
Woo!
That must have been a penthouse.
Yeah, we might be staring at it through the window. Over
there, definitely. So condo market's strong. Usually they are a little bit lower on as far as resale of the single-family residents. They sit on the market a little bit more. But for the folks that are not wanting to do any kind of maintenance on their house, they're looking more attractive. For the people that are selling their larger homes and moving down into a condo, something with less maintenance. So we're seeing a big jump on that side of things too. And I know that our realtors are definitely seeing successes on their condo listings as well.
And that's a whole nother topic we're not going to get into. I mean, COVID might be changing that whole condo. Sure. We did a segment on that. If you guys go back through our shows, we did talking about converting, like what are they going to do with all these vacant, condo buildings? Can you convert them or apartments? So, but the one thing is, like on condo and townhouse, it might be a great way for you to get in, like we're talking about, and then go up to the single family home, because you don't really see as much as a giant increase. Like I was talking about, like the 125,000 increase, list price for the single family over 3 years. You're seeing much less of that kind of on a condo side. So it can allow you to kind of start and get in there.
There's less variance of price because you're in a condominium building. So as those units sell, they're selling at a small percentage over the last one per square footage. So you're seeing a more consistent, gains.
That's why we call him the guru, because he knows that stuff.
Yeah, definitely. But you're listening to the MLO team, slightly less than 2 people. If you're just tuning in, we're talking about loan limits increasing here in 2021. We're just kind of wrapping up our show. We just wanted to get out some information about where we're at here going into the new year. We wanted to wish everybody a great Thanksgiving, and hopefully you guys were able to see your family members. If you didn't, you probably did some Zoom calls like I did, and they were pretty funny. So I appreciate everybody out there listening, holding it down. And if you are in the market right now for a home purchase, a refinance, or just want to talk to one of us about home ownership and what financial goals you need to get there, we are here for you. And you can reach us at 503-847-9038. That's right. That's the VIP number that gets you directly to myself, Addison, Brie, and our main man, KC.
Yeah, someone's going to answer. We appreciate everyone that's tuned in so far in our couple seasons adventures we've been on. We're going to keep giving you guys shows. Might be only 2 of us for, some COVID times here, but, you've been listening to MLO Podcast. Please follow us on Facebook. Shoot us out your questions. Check us out wherever you grab your podcast. We're on all the major platforms.
That's right.
All the major platforms. And we even got YouTube. We got YouTube Shorts out there. We got
Check out our pretty faces.
Check out our pretty faces, and we'll be around. This is Casey Carpenter.
I'm CK.
We will check you guys on the flip side.